Hi guys, welcome to the Savvy Money Show with me, your host Sean. I've got a lot of stocks for you to watch today, so I'm sorry if I breeze through some of them. I'll start with as much information as I can. And we start with Zovio Inc. It is a penny stock. I know some of you don't appreciate those, but there is a reason behind it. Now, if you read this article here by Zacks, I don't think Zacks understands it properly, which is rare. It says go for DocuSign instead. It's an online educational program, but it has a lot of strings to its bow. So nearest competitor to compare it to would be Chegg, who went from $4 to $67, and who I recommended. Well, didn't recommend. I'm not a financial advisor, but I spoke about back in March and April. And I have just consolidated my Chegg, and this one is pretty good. It says 281 million shares on the market, which gives it 123 million market cap, which even for a penny stock is incredibly small. Now, why am I interested? First, we go to financials. Now, it had a $6 million loss last year, but this year had $2 million gain. Yahoo Finance is outdated with some of its stuff. Assets 250 million, liabilities 151 million. Basically, the total assets are 1 million more than its total current assets. So, you can use its total current assets and only have 1 million in total liabilities, which it has another 100 million to use to pay it off. Now, let's go to real reason, shall I? No, that isn't the reason, sorry. The real reason is EdTech Zovio services company Zovio moves corporate headquarters to Chandler in Arizona. Now, moving from San Diego to Arizona saves them $8 million in property fees. Now, if you're saving $8 million in property fees, that's $8 million revenue you haven't got to bring in. It's different if where you're operating is bringing in that much revenue. But this is an online educational. So they're all tied. They've also made new contract tie-ups since moving with a number of other platforms which will bring traffic to them. They have recently employed 300 extra staff since moving, which shows that they have cash on hand to do that. Their earnings date is in August. Now, their revenue has gone down, but their net income has gone up, as I said, by $2 million to $2 million from a $6 million loss. Now, this is the sort of thing that whether you're going in the classroom or whether you're studying at home, you can use. I think Chegg went up so much because of the situation that we're facing at the moment. But if you go back to, we can't get last year's figures at the moment, but if you go back to 2017-18 figures, the amount of people who are taking online classes compared to the year before has jumped so much. Anyway, I'll leave the video there. You can check it out yourself. And I'll move on to Workhorse. You're going to get people coming out with rumours saying Workhorse has got a contract. Workhorse, I'll agree, Workhorse is a front runner, but I came out with a video earlier on today saying a reason why AYRO could end up getting a portion of it. Yeah, I hope Workhorse gets it. People are going to come out with this. Beware, do not panic buy because of it. It's a postal service truck that is a Workhorse one. Basically, it's from includes a truck body manufacturer of Hackney Inc. and Workhorse Group. Just so you know, Workhorse has taken over Hackney Inc. So if they do win it, they will get the whole lot of the funding. However, I'm not saying they're not going to get it. I'm not saying it's a problem with it. But all I'm saying is you have to realise they had to produce these vehicles and give them to USPS so USPS could trial them. That doesn't mean because they're seen out on the streets with USPS sign on them that they're going to get the contract. So do not take this as validation. Now, Solar Edge Technologies. I've been asked about solar. I said before in a previous video how I'm always looking at what's going to be the next hot topic. You know, we've got EVs, we've got cloud-based technologies, we've got work at home things. I want to be ahead of the game and get in before people start. I've said 5G, I think 5G in retail, but I'm also looking at undervalued things. So I'm looking at Solar Edge Technologies and TAN, which is a solar ETF. I haven't pulled the trigger yet because I've got some more research to do. I think that's the one thing I've pulled the trigger on is an iShares ETF. It's a pound index link gilts. I spoke about this before. It's a ticker symbol INXG. Basically it's an inflation linked ETF. So if the UK has inflation, it will go up. I also spoke about our American friends getting on the American version, and I got on this because the UK are opening up. They're putting a lot of money and a lot of things in place, such as the stamp duty holiday up to 500,000, which is originally first time buyers only. Now they're kind of blurring the line whether it's for first time buyers or whether for the second home you can use it. You're having VAT cut from 20% to 5% on leisure and hospitality, including restaurants. There's talk of giving a voucher if you go out to a restaurant. I think that's been scrapped, but if that still stays, there's no way it's not going to be inflation, not in the UK. So that protects me. Now, this is something I'd like someone to help me with. I found this and it just seems too good to be true. Diverse Income Trust PLC. Is that a low? Something that you can request your shares back at the end of the financial year. You can request money from them, and It's US small caps. Now, if you look at it, not much volatility. You get dips every now and then, but it's over a 5-year chart. Now, I don't know if it still pays a dividend, but come on. There we go. Now, it's showing a 4.6% dividend yield under a 1 beta. Now, this is the thing that I find really good with it is, see, this is the thing that cracks me up. Shows no PE ratio, but 16.5 million income, net income. Okay. You look at the asset. I hate when they do this. Right. Hi, so let's go. This debt to assets 0.11%. The total liabilities is 403,000. Total current assets 39.4 million. Total assets 365.6 million. See, the 0.4 of the total current assets would pay off the debt. Now I know it's a fund, I'm not naive, but I'm just wondering what I'm missing. Have I come across something, or is there, have I found something no one else was looking for, or is it just a dead duck? I may have missed something. It might be looking me in the face anyway. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show.